Hello and welcome to the Movers and Shakers show, the monthly video that I create based around trends. Essentially, what are the big trends right now? Are they going to continue and worth hopping onto in the month ahead, or will we see those trends reverse course given an overextension in a single direction? This time around, we're going to be talking about the likes of energy in particular, focus on dollar yen and the FTSE 100. So let's get into the Movers and Shakers show and try to gauge exactly where we go for the month of August. So let's take a look at the indices space first and foremost. You can see that it's the good old FTSE 100 at the top of the stack. Not necessarily something you say very often, quite frankly. FTSE is usually in the middle there somewhere and doesn't necessarily manage to outperform to the point where it's actually beating across the board. But certainly this does point towards a potential inherent strength seen within the UK, given the trade deal that was obtained early doors from Keir Starmer. And some of these other areas, you're seeing significant uncertainty, notably the bottom end of this. You can see the Nifty. So Indian stocks certainly coming under pressure over the course of the past month in reaction to the fact that we saw this spat sort of growing. It has only intensified. Essentially, we're now in a position where the Indians have got a 25% tariff, but also Donald Trump is taking aim at them because of the fact that they have this close relationship with Russia. It's not that long until we hear about the possibility for secondary sanctions coming into play if India and China continue to buy energy products from Russia. So that's going to be a theme for the month ahead. Let's just look first and foremost at the FTSE 100 and see how that is shaping up. And we're recording this, of course, after the latest jobs report in the US, and that was a bit of a shocker, quite frankly, a miss on the headline number, but massive downward revisions to previous months. And so all of a sudden, the strength we've kind of known to be inherent within the US economy over recent months kind of has been undermined. So does that mean that we should be fearful of a recession? Does that mean that we should be confident of rate cuts from the Fed? You know, these are the kind of things that are really going to be coming into play. The fact of the matter is we've seen tariffs coming across the board. We've seen the announcement across a number of countries, 35% for Canada, 25% for India. And so whilst the UK to an extent is shielded, you know, these markets are also international in nature. And so you do see some contagion effect from one market to the next. And notably, the daily time frame shows you that whilst we did see a very strong month of July, we're now starting to kick off the new month with the potential of a double top formation, a breakdown through the trendline support. But you can see here the neckline on this double top would take hold at, there it is, 9058. That is essentially the low of the day today on Friday the 1st. And so a break below that level does point towards the potential for us to see a more protracted pullback here for the FTSE 100. Ultimately, any retracement in my mind is likely a retracement of this move, right? So we don't necessarily know exactly how far that move might come into. Is it going to come into this deep zone between sort of 8,800, 8,900? Or something more shallow in nature. But the question at the moment is you've got this sort of tentative trend line break, but, you know, there's question marks about it because ultimately, you know, is that really a trend line? We don't have the third touch. It does sort of track roughly the sort of ascendancy of this market. But, you know, we'd need to see that breakdown through the double top neckline for me to be more confident that we're going to see a period of downside. And if that does come to hold, I don't necessarily think that that's going to be just a UK-based story. I think that's going to be a global move if it comes to fruition. Of course, right now, markets really trying to work their way through the idea of weaker economics on the US side of things. And what do we think about that? Are we optimistic about rate cuts, or are we going to be pessimistic about the potential direction of travel for the US economy? I would argue probably a bit of pessimism, because if inflation rears its head, then you've got a more problematic situation. The Federal Reserve, of course, are kind of stuck in a bind because they've got pressure on them to cut in September. If we see the economy rolling over, there's more pressure on them to cut. But if we see inflation rearing its head in a meaningful manner with all of these new tariff rates, it, of course, has an impact. And the Fed have to look beyond or look through that inflation. So there is a potential for this to unwind somewhat, certainly if we break through the 9058. But any near-term pullback, in my mind, it's always worthwhile noting the wider prevailing trend, which remains bullish. And so, yes, you'll be breaking out of the intraday trend evident over the course of the past month, but then you'd be looking into this wider trend for a short-term pullback before the bulls likely come back into play. In terms of the Nifty, yeah, we've been seeing some weakness over the course of July, but really that's coming off the back of a period of significant strength. And a lot of the time, it's the case of these months sort of lining up. It often does line up, right? You might have a month that's awful in one month, then suddenly great the next month. You know, we definitely saw that not so long ago for the US dollar. Now, we're seeing here that the 1st of July was pretty much the peak near enough, and then we've sold off ever since. So you can see why it's at the bottom of the pack. People really sort of losing confidence ahead of that deadline on the tariff front. 24473 is the low that needs to break to end this resurgence seen since the lows of April. And certainly we've gone well beyond any of the Fibonacci support levels. So there is a good chance that we continue in this vein. It's a case of just following this on an intraday basis and saying, let's just get there. There we go. So just seeing these sort of stepped moves lower and just sort of tracking that, right? So when you finally break out from this pattern of low highs, that's when I start to say that there's a possibility of it bottoming out. Until that happens, rebounds are likely to be sold into, in particular, if we see a breakdown through 24473 on the Nifty 50 over in India. Now, next up, we're going to be looking at the FX space, and the US dollar has been charging higher over the course of July. It's been a great month for the greenback. And, you know, myself and Timothy Kyrie, we sort of took a look ahead recently on a webinar to the sort of second half of the year. And one of the things that came up was I was saying, you know, do you think this is the bottom for the US dollar? It's difficult because we were maybe a couple of days into it at the time. Certainly, you know, we're not necessarily massively extended in that direction, but things have extended further from there. You can see here in terms of the bottom end of the pack is the Japanese yen. And worthwhile noting that what we have seen throughout this period of weakness in terms of the US dollar was some flows coming into the other havens, right? So people still were fearful. They just didn't want to put their money into the US dollar. So it was the Swiss franc. It was the likes of the Japanese yen gaining ground. This time around, it has switched that dollar yen trend, notably reversing course. Well, the reaction to this payrolls release has started to shift it in the opposite direction. Let's just quickly show you exactly how things are shaping up on dollar yen. So we can see here that the wider trend here on a weekly time frame does show you that we've got this zone of support which has held once again here. You can see 3 lows now on the 140. So are we bottoming? Have we bottomed out here? Are we sort of coming into a recovery phase? You know, it really depends. Like, do we think that we're going to see more action from the Federal Reserve? Do we think that Powell's going to get pushed out? Not necessarily so sure. Now, a lot of the weakness that we saw was about the idea of a breakdown in relations between the US and many trade partners around the world, people reallocating away from the US dollar. That has weakened that story recently because we keep seeing trade deals on seemingly a daily basis, right? I think it was South Korea yesterday adding to that. But then all of a sudden, you've just seen this sheet, this deal sheet, so to speak, of tariffs against pretty much every country in the world, right? And some of them were kind of a shocker. 35% on Canada, definitely not ideal. 25% on India, a number of them there. But essentially, it shifts the narrative back towards that idea of the trade war and people moving out the US dollar. At the same time, we've seen the weakness in terms of the jobs report. And so that's seeing dollar yen start to weaken in a meaningful manner. I'm not necessarily going to say that this rally is over per se, but it does look like we're heading into another retracement phase at least. So we're somewhere halfway into it at the moment. Depends, you know, where we're going to retrace into. But if we're looking at near-term support, 147.8 essentially, or 147, your 61.8 and 76.4 Fibonacci levels. And those are the key levels I'll be looking out for over the near term. I'm not necessarily ruling out the idea that we're going to see another rebound in play. We have got a week ahead of us that could be full of headlines about new trade deals because, of course, as ever, you wouldn't say he's chickened out, but certainly he's given himself another runway for further trade deals. And Trump certainly does want deals. He said that he would have a phone call with Mark Carney at the drop of a hat if he thought that it could result in a trade deal. That doesn't necessarily mean that we will see a trade deal, but it does mean that his his desire. Yes, he does want to see tariffs, but ideally he wouldn't see 35% tariffs. He would see, say, 15% tariffs, so he gets some income, but it doesn't necessarily stoke huge inflation and economic suffering. It's kind of a sweet spot, it appears, from his side. So if we see additional sort of positive news stories coming out, that could help lift things somewhat once again here. So certainly a really interesting market to be looking out for at the moment. We have bottomed out here. Is this the end of that? I wouldn't necessarily say so, but the near-term downside could continue for the next, whatever week, and we'll just see exactly how things play out on the tariff front in particular, and then the US data front, considering the weakness of that jobs data. Do we see further weakness coming into play in the week ahead? And the key number I would be looking out for in the next week is the ISM services PMI, which I think will be a really interesting one in terms of telling us a lot about inflation, but also service level activity in the US right now. And then finally, let's just jump onto the commodity space. You can see here that the top of the pile, just about, it's Brent crude, and oil has been regaining a significant amount of ground. Certainly it's set within a wider trend of deterioration, but periods of strength. And the other side of it is nat gas. Now, interestingly, you've got the two sides of the energy story here. There is, of course, a feeling that we could suddenly see Donald Trump enacting these secondary sanctions against buyers of US crude. So suddenly are we going to see a tighter crude environment? Well, that's part of the reason why we're seeing strength in terms of Brent. Let's just jump onto the charts and see exactly how these charts are shaping up. First and foremost, let's look here at Brent crude. So there we go. So this is Brent from a weekly time frame. The wide chart looks like this, right? So that's your trend. The long-term trend, very clear on the weekly time frame. On the top end, just sort of do these sort of tops line up, not perfectly, but they give you a rough idea of the sort of direction of travel. Similar kind of thing on the bottom, right? I mean, if you're going to try and pick these lows, then that's just going to run into the candles there. You could potentially try and replicate this. All right, let's just clone it. And see if that sort of tallies up on the bottom end. So that does. So we've got this descending channel in play at the moment. You've been seeing plenty of volatility recently. Of course, we saw volatility around the whole Iran story, and then we've seen volatility more recently so this was the whole Iran thing. Then recently seeing this increased strength coming into play off the back of the story around the secondary sanctions for buyers of Russian crude. Now, that's coming off a little bit now, and certainly with the fact that we've seen this weak jobs report, you could say, well, that weak jobs means that we're seeing a weak US economy. They're a key component of the demand situation, and so that could possibly see things roll over from that perspective. Certainly, if you're looking at this hourly chart, you can see this sort of head and shoulders formation with a very clearly distinct neckline here at $71 essentially. So a breakdown through that level points towards a possibility of a retracement, I would say, if we're looking at it as a sort of projected target. Let me just draw it from up there, because there we go. So you're talking about 191, then down here you're looking at $69, and we're retracing from here. Let's see. So there we go, $69. Right, there we go. So it's a 76.4 fib. So if we do see the neckline break, that head and shoulders projection points towards a potential drop into the 76.4 fib. But essentially, this zone would look interesting in my mind. At the moment, the bulls are kind of still here, so there is a chance we don't even see that breakdown from here. But certainly, I think, for me, there's a good chance that we have sort of bottomed out following this latest move. You can see in terms of the daily time frame, this sort of stepped move that we're seeing. We've seen that latest leg higher. Do we roll over into the next retracement before the bulls come back into play to send it towards trendline resistance? Potentially. Certainly one to watch out for. But, if you're going to look at it within the context of this channel, you would say we're somewhere in the middle of the channel already, arguably at the top end of it, really. So if we were to sort of compare it to something in the past, you'd say we're probably somewhere around here, which means we could see further upside. But unless we break out from that pattern, it might be relatively short term in nature, maybe a week or so of gains, and then soon enough it starts to fade once again. So certainly an interesting one to watch out for at the moment. Nat gas also very interesting. The weekly time frame highlights the fact that we've got again this head and shoulders formation, but certainly from a wider perspective with the neckline tallying up down here. There we go. So it's 2978. We're back at that support level at the moment. I'm not necessarily going to project it lower. I just think from a wider context, you can see these are the kind of levels that, you know, we've traded at time and time again. I don't necessarily think we're going to see this massive collapse in terms of prices. If we do break through this this horizontal support level, does point towards the potential for a continuation of the recent weakness that we've been seeing. But like I said, from a wider context, you're coming into an area where, you know, it generally hasn't necessarily dropped too much further than that. And soon enough, you start looking at it as sort of basing out. You look at the daily time frame and you can see that by and large, we do have these sort of swings where we saw that sort of extension towards the upside. And so this pullback at the moment arguably would be part of a sort of wider, got the wrong thing drawn there, part of a wider sort of multi-legged retracement of this rally from 1939. At the moment, 61.8 is essentially the low zone that we've been respecting. So below that, like I said, I don't necessarily think that you'd be looking for a projected move lower. So below that, 26445 would be interesting, which is 76.45. But for me, I think there's a good chance that we do sort of hold up, certainly if we see the possibility of secondary sanctions that also impact the flow of gas. Then do we see some of those buyers actually pushing back against the Russians and stop buying their cheap gas? Possibly, maybe not. I mean, look, the Chinese haven't shown a willingness to do it, neither have the Indians, but now you've got higher rates of tariffs coming into play, so it's on them really. So certainly an interesting market to watch out for, but not necessarily a given we're going to break through support. If we don't, then you're looking for a potential rebound from this support level once again, which has held up as essentially the lows of 2025 thus far. So will it hold once again, or will we break to a new 2025 low? That's what's at stake when it comes to natural gas. Anyway, plenty to go at. I mean, it's going to be a really interesting month ahead. There's constant deadlines, whether it's deadlines for when we're going to see the tariffs coming into play that he's just announced, whether it's the deadline for Russia to strike a trade agreement with Ukraine. All of it feeds into the same narrative that is just constant brinkmanship and volatility within markets and uncertainty. Given the fact that we've just seen such a poor jobs report out of the US, it does also make things a bit more interesting to see whether other parts of the US data tell the same story, the same narrative. Whether that remains to be seen or not, you know, that's going to be feeding into sentiment for all of the markets we're touching on today. I hope that's been useful, and make sure to like, subscribe, and check us out for more content like this. My name's Josh Mahony, Chief Market Analyst at Scope Markets. Have a great day. Have a good weekend and week and month ahead. Thanks a lot.